Should you get retail treasury bonds? Is it worth the risk? Is it something very, very complicated? Is it something that you should actually avoid? What are retail treasury bonds? Why should you invest in them? And what are the perks and the advantages if you invest in retail treasury bonds? Hey guys, hope you guys are having a great weekend so far. I got a lot of questions asking about the new offering of the government for the retail treasury bonds. So these are for people who are relatively low risk. You don't want to take a lot of exposure into the volatility. You might be a person who just wants to preserve your income, or you're a person who just wants to get more as compared to time deposits. So this is for you. We're gonna break it down, and we're gonna try to see and tackle how this works in the general scheme of things, and to whom this will actually fit. So you have to understand this. No, there's no such thing as a perfect investment. That there's a type of investment that will fit different types of people as well. So if this fits you, you're a person who wants to conserve your income, you're a person who wants to preserve what capital you have, I think government retail treasury bonds will do well for you. So let's try to break it down, and let's see the pros and cons of this, and how you can actually get them and attain them, and where the proceeds of the money will go. Alright, so here's the thing. Let's take it one by one. Retail treasury bonds are a form of bond offerings, meaning the government will borrow money from you over a short-term period. As the government borrows money from you, it's you giving your money to them and lending it for an interest rate. So here's what's amazing about that. I always tell people this: if you put money in time deposits, each time you put money in time deposits, the thing about that is this: the money that you put in time deposits, they will just use that, or the money that you put in banks, they will just use that to put it also in bonds similar to this, either corporate bonds or retail treasury bonds, or any government bonds. Meaning the money that you place there will just be used also by banks to leverage the money that you place, and then earn a bigger percentage off of it. So why am I saying this? If you're a person that wants to actually get something that's low risk, similar to time deposits, then might as well go straight and just open retail treasury bonds on your own. These are normally higher yielding investments. So for this retail treasury bond offering, which I think started this May 30, which will end this June 8, it's 4.875%, which is the gross percentage. As you all know, every time you put an amount, it always will be less 20% tax. So 4.875% less 20% tax, that will be your net rate. The payout will be on a quarterly basis. So how does it normally go? Once you open an account, you will be asked to designate a settlement account, and that settlement account, that's where most of the proceeds of your quarterly interest rates will go. So this particular offering will be up until June 2021. What does that mean? So when you get your money this June, when you lend the money to the government this June, for the next 3 years, you will be getting the 4.875% interest over a quarterly basis up until June 2021. What happens in June 2021? In June 2021, the government returns your money back. It will go to the bank where you opened your retail treasury bond. So what's amazing about that, most of the major banks, BPI, BDO, are connected to this. So if you have an account with them, you can easily avail of this investment, and then it will be nominated to the settlement account of the branch that you have. However, if you don't have an account yet in this bank, you just open, and then that's where your the settlement account, that's where your interest will be placed after. And then after the tenure also of the bond, they'll return the money back to your settlement account. It's as straightforward as that. So now let's talk about risk. So I mentioned that when you put your money in a retail treasury bond, it essentially allows you to how do I say this? Lend money to the government. So what does that mean? When it comes to risk, it's just like you putting your money in a bond. What's the difference? If you buy an Ayala bond, the risk there is this: if Ayala defaults, meaning they don't have enough money to pay for their debt, there's a possibility that you don't get any earnings off of it. That's the risk that's attached to it. However, the difference between the government and corporate bonds is this: government bonds are essentially risk-free, meaning the government will assure that they will pay for the debt that they borrowed from you. So literally, for me, if you are a short-term investor that wants passive returns, that you want something that's risk-free but higher than time deposits, higher than any bank products, go for this. Go for retail treasury bonds. Next, there's a misconception that since they think it's a 3-year investment, you actually have to hold it for the 3-year period. No naman. You have to remember, these bonds are one of the most liquid products available, that if you want to sell it, you can easily sell it anytime you want, when you want to sell it, at the time that you want to sell it. So retail treasury bonds are not just low interest, they're not just passive, they're not just low risk, but it's also something that's very, very liquid, that if you want to, there comes a point in time that you need the money, you can easily sell it to the bank, and then the bank will buy it from you. But again, that will be dependent naman. That's where you have a level of risk also, because interest rates change over time. But essentially, if you hold on to it, you won't have any risk attached to it. But in terms of liquidity, you can sell it anytime. So characteristics: it's low risk, it's for short-term investments, it's for people who just want a higher return than time deposits, it's for people who probably earned from the stock market already, and then just want to pocket some of the returns that they actually have. So now, next, if you want to open up, please remember, I think the deadline is until June 8th, but please remember this, this type of investments normally run out fast, meaning a lot of investors would go straight and invest into this. So if you have the time, go to your bank, go to the underwriters go to banks that are connected to this, and open an account as well. I'll try to put some of the banks that I know will allow you to open with them, as it allows you to open with them as long as they're still available slots, and as long as it's within the offer period. You will have a slot, you will have a chance to be able to get it. So the minimum amount, basically, since it's a retail treasury bond, you have to understand this, governments issue bonds all the time, but the main characteristic of a retail treasury bond is it's for retailers, meaning they want a lot of Filipinos also to take advantage and to at least have a shot at investing, and also lending money to the government, and also to have a shot of at least making I guess a decent amount of return as compared to banks and time deposits. So the minimum amount of this is just 5,000 pesos. So meaning anyone who has extra savings, put it here. Especially for people who have money time deposits, tapos yung pera sa time deposits for 5, 10, 20 years din yung ginagalaw, you will get a better return from this. So that's it. It's literally just like a time deposit. Its risk is just like, it's even lesser than it, because it's risk free, because it's the government who will shoulder, or who will protect it, that they will make sure that it gets paid out. So that's it. What else? This is guaranteed by the government. This is low risk. This is short term, 3 years, but it will give you a much higher return than time deposits as well. So what else do you need to know? That's it. The money will be used, as you all know, for those who've been following what's happening in the economy. The government has been borrowing, not just borrowing from the Japanese or the Chinese, but they've been borrowing also from locals, which are us. They're borrowing from us so that they can fund whatever expansion that they will have from infrastructure to any other social services that are out there. So that's it. I'll be in Melbourne, Australia this weekend, Stock Smarts Melbourne, June 9 to 11. Then I will be in Stock Smarts Manila, June 16, 17, 23, 24, and June 30 for technical and fundamental analysis. So if you want to know more, I'll put the link below so you can actually join us. The heart of all of this is for you guys to be part of the growth, so you can trade the markets with ease and confidence as well. So that's it for now. If you're a risk-averse person, I highly suggest get as much retail treasury bonds as possible. So that's it for now. God bless you. I hope this video helps you trade well, trade strong, trade smart. See you all again soon.